Good morning, good afternoon, and good evening, everyone. Thank you for joining us for this UFI Connects session in collaboration with Arabia Monitor, titled The Middle East in the New Brave World, China, Oil, COVID-19, and Beyond. As we have a diverse audience today, let me do very quick introductions. UFI is the global association of the exhibition industry, headquartered in Paris, in France, with a global team present in 5 continents. Arabia Monitor Research and Strategy is a London-based independent think tank focused on the economies, markets, and geopolitics of the Middle East and North Africa. Please note that your microphones will be muted for now. If you have a question, please use the chat button down to write your question. And when time comes, we will give you the microphone to address your question directly and live. So these are unprecedented times we all live in. A pandemic outbreak, a great lockdown affecting billions of people and businesses around the world, coupled with a severe economic slowdown, history record low oil prices, high unemployment rates, with high uncertainty ahead. What could be the impact of all this, specifically on countries in the Middle East and North Africa region, when some of them were already suffering from socio-political unrest, slow economies, negative growth rates, wars, refugees crisis, high rates of unemployment, and others. So we will talk also today, in addition to all these topics, we will talk about rebuilding economies and the opportunities ahead. But for now, and without any further delay, I would like to welcome our guest speaker for today, Dr. Florence Eid-Oakden, Chief Economist and CEO of Arabia Monitor, who is joining us from her office in Amman, Jordan. Good afternoon, Dr. Eid, and thank you for being with us today.
Naji, hello. Thank you for this very kind introduction. It's a pleasure to be part of this UFI event. You're a prestigious organization that dates from a century ago. And
yes.
It is formidable, the challenges that your industry is facing today. So it's absolutely my pleasure to be speaking to your members about what's happening in the world today. Monitor, my pleasure. A word about Arabia Monitor. We are the only independent research think tank specialized in the Middle East and North Africa. And we are also the only think tank that specializes in the New Silk Route and the Mena region. An area that we feel is the next big tectonic plate shift impacting the Middle East and North Africa in particular, given the competition to oil markets, as we have clearly seen over the past few months. And so our teams are made up of Arabic-speaking analysts and Chinese analysts, and we publish every day in Chinese. So that's a word about us. Previously, I used to be chief economist for the bank JP Morgan, and have my doctorate from the United States in economics, where I also worked in Latin America on economic development. So that's a little bit about us. And with that, would you like me to begin with the presentation, Naji, or?
Yes, please. Yeah, go ahead, Dr. Florence. Thank you for the introduction as well. And we are all ears. Just allow me to maybe interrupt you within the slides to ask questions and maybe also take questions from the audience, if you do not mind. But please go ahead. The floor is yours.
Pleasure. The objective is to try and make this as interactive as possible. There are 4 segments to my presentation that I wish to share with you. If you just give me a moment, I think we've had a bit of a glitch in terms of uploading presentation.
It's okay. We're getting used to it. It's fine. We're all going through this. The change is not easy. The shift is not easy. So yeah, we all understand.
Here we are. Right.
We can see that you started. Yes, we can see the presentation. If you put it in full mode, please.
So the title of our talk has already been shared with you by Naji, and this is the outline of what we would like to speak to you about. First of all, it's in order to understand the bigger picture about what's going on in the Middle East and North Africa. I think it's important to sorry, I've gotten a request for someone entering the meeting and I've let them in. I think it's important to understand that, first of all, the V-shaped recovery that was initially predicted by the Middle East and North Africa for the department at the IMF is now going to be revised. And the IMF and World Bank are in the process of doing so as we speak. And so even a V-shaped recovery, which looked optimistic when it was first forecast back in April, would have resulted in 2 years of zero growth. So it's important to understand the growth path coming out of this period, and to also understand the geopolitical risks, such as events that we've seen before in the region, like the Arab Spring. So we'll go over this section, and then Naji, if there are questions, we're very happy to take them, or if you'd like to challenge me on any of it, by all means. Then the big question is, what happens to foreign direct investment in the region? Because this is a region, as you know, that has put together some major visions for the future, such as the Vision 2030 in Saudi Arabia. And the implementation of these visions for the region is highly reliant on foreign direct investment because of reasons I will share with you in a moment. And finally, the last section that we will cover, or the first section in this case, is what is happening, government responses, etc. So if we have a look at growth in the region between the year 2000 and the year 2021, what we find is that we've had several dips to growth, and these dips have been important dips. So in 2009, there was a major dip to the growth chart, as you see here inside the red circle. And then we had another one in 2015 that was a direct result of the decline in oil prices in 2015. And then we have a third one that we're experiencing now. So these are the three major dips since the year 2000. In the midst of all of that, we had a major peak in 2007 of growth, followed by collapse after the financial crisis. And we had another peak in 2016, followed by a collapse in 2017 because of where oil prices were in 2016. I'd like to remind you here that 2016 saw oil prices that resemble the forecast for the average for this year, which is in the low 40s. And 2016 is an interesting reference year for us because that's where when the price of oil dropped. Now, if you take a look at growth, for example, for an economy like the United Arab Emirates, you'll find that whenever oil prices collapsed, and these black numbers here on top of the blue bars are the average price of oil for the year. So whenever oil prices collapsed, you saw a collapse in growth that was quite significant. So in 2008, we saw the price of oil going from an average of 96 to an average of 61, and we saw the United Arab Emirates experience a fairly massive collapse of growth. The reason why the contraction in growth in the United Arab Emirates was more significant than in other parts of the region is because of the nature of the Emirati economy. It exports oil, but it's also relatively well diversified. And so when there is a global shock, it is vulnerable to that global shock. The same sort of thing is what we will experience this year. So the initial forecast from the IMF for the contraction in growth from the United Arab Emirates was a very optimistic forecast. This forecast will be revised downwards. It will definitely be a collapse in growth of more than 3%, 3.5% here. and it will resemble more the contraction in growth of 2009, and we think it would surpass it. Now, here, the recovery in 2021 is based on a V-shaped curve. And this, again, was the forecast by the IMF. And I wanted to discuss that with you, to say to you that I don't think that that will obtain unless we have a massively positive surprise in the recovery of the price of oil. But if you have heard the news over the past few days regarding second rounds of coronavirus, this time around in Beijing, in China, you will have noted that there are a worrying set of figures on the horizon with respect to Chinese growth, and the Chinese government now essentially gotten rid of its growth forecast for this year. It has said, we don't know what the growth forecast is going to be for this year. We'll see how it goes. So the reason why I'm showing you this chart is to show you how an economy like the UAE in the region is quite vulnerable to what goes on in the world, and not just to the price of oil. And so we see the contraction in 2019 because of what was happening globally. And we will see a similar contraction in 2020, if not more, and a slower recovery in 2021 than what we saw in 2010. So these are important features to keep in mind for those of you based in the UAE and doing business. Now, the region remains vulnerable to the unemployment picture, and that is an important factor to keep in mind. Especially youth unemployment in the Mena region is quite high. And so this is an important factor to keep in mind. The red line there is youth unemployment in the Mena region, and you can see that it's the highest in the world. Now, youth unemployment and unemployment more generally is what resulted in the tremors that resulted in the beginning of the Arab Spring in Tunisia in 2011 on the back of very slow growth from Europe. Yeah, I'm very happy to come back to if there are questions about it. But one of the geopolitical risks that the region faces today is that it was on the back of economic slowdown as a result of the Arab Spring and as a result of the financial crisis in the world that we saw the changes in regimes across the region. I'm not saying that we will once again see changes in regimes. I am just saying that this is a critical time that will require very careful management by leaders in the region, and that resumption of economic activity is going to be key to this critical time.
Yeah. Dr. Florence, I would like to go back to on the slide that talks about the gradual recovery of the economy in UAE. I have a few questions on that one, but before, I would like to take the opinion of our audience in our first polling question that will be launched on the screen shortly. How do you see the economic recovery in the near future? Is it gonna take a V shape, a U shape, or an L shape? So then we can comment on the results and ask you questions about the gradual recovery expected for the UAE and beyond. So we're getting answers still. I think this is quite expected. Yes, U-shape. Majority of our audience think that there will be a U-shape recovery for the economy. 26%, quarter of them think that it's going to be L-shaped. This may be more on a pessimistic side. So you spoke about gradual recovery from mid-2021 in the UAE. So I have a multi-layered question, if you don't mind. So is this forecast take into consideration that a vaccine may be found for coronavirus? And does it mean, if we're talking now about a recovery in mid-2021, does it mean that we already hit a bottom or the economy hit a bottom, or we are yet to see a bottom in the economy? And does recovery, when we talk about recovery, does it mean going back to pre-COVID situation or going back to normal situation where at least we are not in the negative?
So I think that's a very good set of questions. First of all, I'd like to comment on the results of the survey. Thank you to all of those who participated. Do participate. We have two more questions coming up, and we'd love to have your views. I would like to share my view. I personally think it's going to be a very wide bottomed U-shaped recovery, not necessarily an L, but a very wide bottomed U. The economies will recover, but not very rapidly. And the two drivers of economic recovery in the region have always been the same. The first is oil exports, and the second is the global environment. The new factor that has come into play now is China. China has become an ever more important player in the region, and we're going to talk about that next. China is the region's most significant client in terms of purchases of oil and gas. And the region is China's most significant client in terms of Chinese purchases of oil and gas. And so the third new factor is the role of China in the world. And some of the things that will determine how wide-based this U is going to be are the following. First of all, there's an emergent enmity between the United States and China that is impacting the rest of the Western countries in significant ways. I would even call this the new Cold War. We'll talk about this a bit further. The growth trajectory of China is not yet clear. So independently of the global geopolitics, it's not yet clear how China will recover and whether, for example, China will continue to demand more oil from the Mena region, because the demand for oil from China was growing healthily at very significant growth rates. And so will it stabilize? Will it taper off? Will it decline? That's a big question in terms of recovery in the region. I want to say that the reason why I believe it's going to be a very wide bottom U for the UAE is because if you look at this chart that we have on now, you'll find that from the years 2012 to 2019, we've not had very strong growth rates. I mean, in 2013, 14, 15, we had growth rates of just above 4%. Those are all right. But if you have a look at 2016, 17, 18, and 19, these were fairly lackluster growth years. And so the contraction, which is now going to be more deep than this bar shows you, came on the back of 4 lackluster years of growth. I believe that the UAE economy is going to take a bit longer to recover. The other thing that I personally am convinced of, Naji, is that the Middle East and North African economies are going to have to reinvent themselves in more ways than one. And that's a very important aspect of what's going on here. These economies are going to have to, in particular the UAE, in a way not dissimilar to the manner in which Singapore has reinvented itself many times since it was essentially the modern Singapore was created by Lee Kuan Yew. These economies are going to have to reinvent themselves in significant ways. So I hope that answers your set of questions. And if you have more of them, we can maybe get back to them during the next section of the talk. Happy to do that?
Yeah, of course. So yeah, just before, maybe my next question would be answered in your slides, but because you tapped on the China-MENA relations. So according to IMF, the International Monetary Fund, the volume of trade between China and the Gulf states in specific was just above $200 billion in 2017. The coronavirus pandemic now has put China on the defense globally, as we all know. So how do you see this unfolding, and what impact could it have on the MENA-China relation in the near to midterm future?
It will, if Chinese trade, well, first of all, let's start at the beginning. First of all, my personal view is that the trade deal between the United States and China is probably dead in the water now, certainly between the Trump administration and China, because of various factors. It had hardly been completed when the pandemic started to impact the United States. This is an election year for Mr. Trump.
Mm-hmm.
Therefore, you can believe that he's going to benefit from quite a lot of China bashing for his electoral campaign in order to blame the slowdown and the destruction in the US economy on China. I don't think that's going to make for an optimal environment in terms of completing and implementing the trade deal between the United States and China. And the world will recover more slowly without this trade deal. So this is not just a trade deal between two countries, it's a trade deal between essentially China and the rest of the world. Now, how does that impact the MENA? We have countries that rely quite significantly on global trade from China, directly and indirectly. So for example, in terms of the UAE economy, we all know that the UAE economy is a major re-export hub. And we all know that about 60% of Chinese trade that comes into the UAE actually goes out of the UAE again, out of Jebel Ali and other ports, in order to be exported to Africa and to Europe. So the UAE is a very important re-export hub for Chinese goods, in addition to being an important import hub for Chinese goods, and in addition to being an important export hub. Now, the other thing that could start to happen, and separately from all of that, I'm sort of anticipating the next section here, but I might as well, it's all right. The other thing that could start to happen is that some of the Middle Eastern economies could start to come under a bit of geopolitical pressure if the tensions and enmity between China and the rest of the world continue to rise. For example, we know that some of the Gulf states have done what was logical to do, which was to open up in China in major ways, to invite Chinese investments, to encourage Chinese foreign direct investment and portfolio investment in their markets. All of these things obviously have been the logical thing to do as the economies diversified, which is what the world wanted them to do, and grew. And so we have been tracking this very carefully, but everything, starting from Chinese mall footfall to flat purchases in Dubai to investment by Chinese financial institutions into debt issuance in the MENA region and other sorts of equity and debt instruments. All of this has been growing in double digits year on year. And so the question then becomes, if the tensions between China and the West rise to the point of really starting to resemble a new Cold War, then how does the MENA region get impacted by all of that? If you have a look at this map I have here, you'll see that the MENA region is really in the midst of the Belt and Road Initiative. So if you take a look at this red line, that's the traditional Silk Route, which was written up by Marco Polo, and the blue line here is the new 21st century maritime Silk Route that the Chinese designed and are investing along the lines of, in order to be able to avoid the Strait of Malaga, reinforce their presence in the seas, and have more rapid and smoother trade lines. So if you take a look at this map, the two together constitute the new Silk Roads. And certainly the Gulf states lie right in between these two things. At the same time, if you've followed the news on Hong Kong recently, and the emergency security law that is being passed in Hong Kong, and the positions that some Western governments are having to take vis-a-vis that law, you'll find that traditional partners and allies of the MENA region are lining up either for or against this conflict in a way that could make the geopolitics of the Gulf states a bit more complicated. The way I see it is that there are two major tectonic plates that surround the MENA region and certainly the Gulf states. One is the Asian tectonic plate, and one is the Western tectonic plate with a capital W. And these tectonic plates are now starting to move. And the MENA region, certainly the Gulf states, lie on a fault line, and it's a very slippery fault line at this stage. Banks that have traditionally been major players in the MENA region, such as HSBC and Standard Chartered, have come out in support of, for example, the emergency law in Hong Kong, while the government of the United Kingdom has come out against it. So this is hence our title, A Brave New World. You know, how do you understand all of that, and how do you analyze the way in which it stacks up? So we're entering a world that's going to require a lot of intelligence sharing, a lot of cooperation, a lot of networking to compensate for the downsides of international politics. And I think this is where your industry comes in, because your industry is an industry that specializes in putting people together, specializes in sharing information, specializes in networking. And, you know, at the end of the day, business will always be done if people can network and reach out to each other. But the circumstances are about to become a little more complex, I would submit to you. So if I were to show you the detail of some of these pictures and why they are important for the Middle East and North Africa, they would more or less look like this. But Naji, before I get to this next slide, would you like to let me know if there are questions you'd like to raise at this point from our participants?
Yeah, actually, we have a couple of questions. So first, on the oil market, how is MENA dealing with the collapse of prices, and which GCC countries are most stressed fiscally, and why? And we have also another question. So at the same time, maybe you answer both, from Mr. Paul Gulmi, saying Middle East countries are trying to get less dependent from oil, example, Saudi Arabia. And you spoke about diversification. So when do you see, the question is, when do you see the relationship economic growth or decline and oil prices become less connected?
Let me answer the second question first.
Sure.
Gulmi, the correlation between growth and the price of oil in the Gulf states remains extremely tight. So the short answer to your question is that diversification is nowhere near where it would have needed to be at this stage in order for these economies to sail through a collapse in the price of oil unperturbed. So that's not going to happen. And this is why we are saying this time around it's going to be a wide bottom due and not a snapback. Like we saw after the financial crisis in some of these markets. So that's the short answer to the question. Now, some economies are more diversified than others, and the oil importers of the region are diversified, you know, to a certain extent. Egypt is quite well diversified. Morocco is doing its best to diversify away from agriculture, and it's made some important strides forward in renewables and in outsourcing, meaning manufacturing outsourcing from Europe and from other parts of the world. However, by and large, the oil exporters of the region, Algeria is probably the most obvious case, remain highly undiversified. Algeria, by the way, used to be the breadbasket of the Roman Empire. You know, back when the Roman Empire was a small part of the world in relative terms, Algeria was the breadbasket of, Northern Europe when Northern Europe had less good weather and less good health. Speaking of health these days, the plagues and what have you, Algeria was a place of plenty. And some of you might have heard about Lebanese wines. It is said that some of the oldest grapes used to make Lebanese wines were taken under the French mandate in the 1800s from Algeria to Lebanon. Obviously, Lebanon is a much more famous place for wine than Algeria, but this tells you something about the history. The short answer is that things remain highly undiversified, and the economies, Naji, that are going to take the longest to recover and suffer the longest are the ones that are least diversified. So within the Gulf, I don't think personally that, for example, because Saudi Arabia is less diversified than the UAE, I don't think that Saudi Arabia will recover more rapidly. Because the oil component is going to be a very, very significant component of this recovery. It's possible that, for example, Egypt, a more diversified economy in whose interest it is to pay less for oil because it imports oil. It's possible that these sorts of economies, Morocco, etc., Tunisia, might recover more rapidly. However, there are other sources of drags on growth for these economies. Tourism is such an important component of GDP for Morocco, Tunisia, Egypt. Trade through the Suez Canal is such an important component of GDP for Egypt. And some of them are too small to be able to benefit from a change in domestic tourism. So Egypt is trying to push domestic tourism, for example, for people who can't travel. That's not the case for Tunisia. That's not the case for Morocco. That's, even if pushed very hard, that's still going to constitute a very small proportion of GDP. And so if we try to think about which economies will recover fastest, I think it will be the economies that perhaps are the most diversified. If trade recovers in the world, let's say we have a democratic administration come in the US, let's say that a trade deal with China is struck regardless. Let's say a vaccine, you asked me earlier about a vaccine, let's say a vaccine is rapidly created. I'm not a big believer in that a vaccine will be rapidly created, but even if it is, there's still time required in order to commercialize it, disseminate it, make it accessible and affordable. So all of that's going to take some time. To answer your question, I think that the economies that will do best in terms of recovering are the ones that are going to figure out how to adapt best. And adapting best to this brave new world is going to be about how to adjust one's expenditures in line with one's revenues. Because at the current prices of oil, the break-even point isn't reached for the budgets that were in place for 2020. And the magic number for most of these economies is 60 for the Gulf exporters. $60 a barrel, the wheels start to turn properly and the visions can be delivered at sort of a slow but reasonable pace. Below that, the visions are compromised, they have to be curtailed, and there isn't enough liquidity in those economies. So then the question is, how do you innovate in order to survive? How do you innovate in order to move forward? And I think this is going to be a real test of the mettle of the leaders of the region in order to innovate rapidly, reinvent themselves in certain ways, favor sectors that are dynamic and strong, and navigate this very, very slippery fault line between the two tectonic plates I described in order to benefit from what China has to offer, including investment, without suffering the downside of having a relationship with China when the protectors of the region are firmly in the Western orbit. I think we all understand what this particular point is about. So those would be my thoughts, Naji. I don't know if there are any further questions you would like to ask at this stage, but otherwise I can continue.
Yes, we have further questions, of course, and I will invite also someone from the audience to ask directly the question. But for now, let's go for another polling question, see what our audience think about our next topic or about our next question. So do you see a decline in China-MENA trade volume over the medium term? This is the question. Do you see a decline in China-MENA trade volume over the medium term? And you know, we as also, I mean, the community of UFI, as event organizers, we have seen, you know, participation from the Chinese companies rising over the past few years. So it's somehow equal answer. So 52% say yes, 48% say no. So there is kind of a gray area here.
Yeah.
And again, thinking about our industry, will export from China be really reduced? Then the presentation of Chinese products and companies and exporters be reduced in our exhibitions in the Middle East? That's the question.
Yeah. So I actually I'm of the opposite view to what came out of this poll. It's interesting to have taken the poll. I think that we will see a short-term dip, possibly, not for sure, in trade between the MENA region and China. It's possible we won't see a decline in overall dollar figures of trade between the MENA region and China. If we see a decline short-term, meaning over the current quarter, for which we don't have the figures yet, and the next quarter, if we see a decline short-term, it would be due to the global environment, obviously due to the pandemic, but not due to decreased demand between China and the Middle East, because about 80 to 85% of trade between China and the Middle East is oil and gas. And the rest of the trade volume between China and the Middle East is in areas that the Middle East really needs very, very much, like
technology, construction,
manufacturing in various areas, etc. However, in the medium term, I can give you a clear answer to that. In the medium term, I don't see a decline in trade between China and the Middle East. To the contrary, I see a continued fairly voracious appetite for Chinese trade with the MENA region. I see a continued fairly voracious interest in Chinese visitors to the MENA regions, shoppers to the MENA region, tourists to the MENA region, and bidders for business from the MENA region, because the China going out strategy, it's called the China Go Abroad strategy. It's also expressed as the Belt and Road Initiative, all of that. And none of that is going to be rolled back. It's just going to be, in my view, reconsidered. But I don't see a massive collapse in the relationship, in trade relationships between the Middle East and China. And that should be a good thing for those of you involved directly or indirectly in exhibitions that involve China. The other thing I'd like to share with you that is probably helpful to you as an organization and as various exhibition managers is that last week I had a seminar with the Chinese association that was established on the back of the Belt and Road Initiative and the UN initiative to create a regional energy grid in the MENA region. And so there's an organization called GEIDCO, GEIDCO, in China. And we had a webinar with them last week. And on this webinar were many, many international companies and many Chinese companies. And what I can tell you is that over this pandemic period, I have seen an unprecedented willingness by the Chinese to participate in international webinars and conferences, including via Zoom, like we're doing now, and in English. none of this I had seen before. In China, in the past, in order to do anything, you needed to go in person, or you needed to organize a meeting with the Chinese in person, in situ. And I feel that the pandemic has caused the Chinese to accept, to engage with the world the way the modern exhibition and conference industry is going to evolve, which is to have continued person-to-person contact where necessary, where a market for goods and ideas is necessary, but where there isn't a market necessarily that needs to be proposed to people, just sharing of knowledge like we are doing now, they're very willing to take part in that sort of thing. And this is new. I didn't used to see that before. We've been working on China for 9 years now. You know, the Chinese, by and large, you know, like to have things done in Chinese, so you need translation. They don't want to speak in English. They don't want you to speak to them in English, even if they understand it perfectly. I've seen quite a lot of change, and I think that's the silver lining for your industry. Silver lining for your industry is that this major big player in the world today is willing to engage with the world in a way that really constitutes the evolution of how things are going. So I hope that helps by way of...
Yeah, sure. Yeah, sure. Very interesting to know. Thank you for sharing this insight, Dr. Eid. I think we have an intervention and a question from Mr. Paul Colston. If you can take the microphone and please ask the question.
Yeah, with pleasure. I would like to suggest that at this stage, given that we've essentially laid out the major themes of my presentation, I would like to suggest that we don't go back to the slides and just spend the rest of the time, you know, having discussions with people directly. Please go ahead, Mr. Colston.
Yes, hello, Dr. Florence, and thank you, Naji. I certainly endorse what you said just now about the Chinese mice industry opening up with webinars, and I took part in one myself where they put up the first show director in Hunan Auto Show that came back, as you've probably seen. And you certainly make the point about the important role of China in trade in the MENA region. But do you not think that you may have been overplaying the map with MENA's hub role for the Chinese One Belt, One Road, which, as I understood, the major routes are much farther north and central, and through Russia, for example, as we heard at the UFI Congress recently?
I agree with you entirely. I'm sorry if my point came across in such a reductionist manner. That wasn't the intention. What I meant to say, and the, if you like, the result of what I was trying to convey actually implies that China is much more important to the MENA region than the MENA region is to China, except in oil. All the other hubs along the map. So I think, you know, if we go back to this map for a moment, what I would like to show you is that all around the new Silk routes, there are hubs, and these hubs are arguably all as important, if not more important, to China. So all of this part here that I'm encircling, the stands are a very important hub for China. And because they border China, they're extremely important. Africa, as you know, is an extremely important hub for China, which is why China has built a seaport in Djibouti, and which is why this trade route goes around the Horn of Africa. The importance of China extends to Western Europe. Italy is the only major Western European country that has formally signed up to the Belt and Road Initiative via the investment that it is looking to receive from Belt and Road funds into the port of Trieste. This may or may not conclude, given the way the world has turned. However, there are many, many other important hubs for China. However, for the MENA region, China is very important.
Thank you very much. Thank you.
I didn't mean to convey that the only important hub in that part of the world is the MENA region.
Great, thank you. We have another question from Mr. Qasim. If you are online with us now, please address your question.
Hi, greetings everyone from London. Sorry, it's raining outside, so you're very lucky to be where you are. Dr. Eid, I just wanted to, if at possible, have your views on the likely effects of Brexit on the relations between the UK, maybe the rest of Europe, with the MENA region. Thank you.
I don't think that trade between the UK and the MENA region will be impacted significantly because of Brexit. I think that, to be honest, trade between the MENA region and Europe is more in the favor of Europe, meaning the trade balance is positive for Europe and negative for the MENA region. That is because the MENA region buys from Europe quite a lot of things, as you know, that it doesn't produce, including luxury goods in masses. And the MENA region doesn't sell very much to Europe, other than hotel rooms when people come as tourists, and gas to the UK from Qatar. So as a result of that, because this trade relationship is pretty much unidirectional, and a big component of that is the arms industry. Europe produces arms and it sells it to the Middle East and North Africa. I don't see much impact. Had it been different, had it been in reverse direction, meaning had the trade balance been positive in favor of the MENA region, this would have been a different type of reply for you. I hope that answers the question.
Okay, Qasim. I think, it's okay. Thank you, Dr. Eid. I have a question now to you, please. So, in 2019, UFI, in collaboration with Oxford Economics, published a report on the global economic impact of exhibitions, showing that trade exhibitions generated $325 billion in total output, business sales, of course, $200 billion in total GDP, including direct, indirect, and induced GDP impact, and created 3.2 million jobs around the world. So my question is now, you spoke about, rebuilding economies and diversification and recovery, etc., especially in the region here. Do you believe that governments should prioritize the comeback of controlled business events? From your point of view as non-event professional, but as an economist, do you see that governments should prioritize the comeback of business events in a controllable way, of course, or is it seen as a risky trade-off?
I'm not an event organizer myself, but I always take part in events. So I know this world very, very well. And I can tell you that my reply to your question is categorical. Governments in the Middle East and North Africa have no choice but to resume events, because these are economies that have had two sources of growth over the past couple of decades. One is oil exports, certainly for the Gulf, and the other is inward business, inward FDI. There are no other sources of growth because they don't manufacture anything other than oil and gas, by and large. Therefore, business connections and networking are key. And I think that even though the numbers seem to be, quite worrisome, the announcement made by Egypt, the health minister in Egypt a month and a half ago, actually summarized it all. She said, we're going to have to live with coronavirus. And as you all know, and as we have all said, it might be a while before we have a vaccine. And so and if we look at history, it took longer than people are hoping for vaccines to be developed for major diseases. So there's no reason why it would be developed faster this time, although we're all hopeful that science is now progressing faster and the whole world is teaming up to do it. I hope so, but my personal view is that we have to learn to live with the vaccine and learn to live with the risk. And, you know, one way of learning to live with the risk, obviously, is to accelerate the race toward a vaccine. The other way of learning to live with the risk is to ensure that health systems can cater for the return of spikes in the pandemic, because there will be returns of spikes in the pandemic. We're seeing the first major one in Beijing right now. The city is almost shut down, and that's Beijing, you know. One building in Beijing is the size of an Arab city. I mean, it's, you know, it's Beijing. So, so I think, you know, to summarize it for you again, I think that the Arab governments have no choice but to resume what's happening. I think they have no choice but to look forward to an expo in Dubai, for example, and to resume conferences and exhibitions in a controlled way, in the most safe way possible. There are new protocols, there are new ways of doing things. There are mixes of, you know, webinars and in-person type exhibitions where, you know, people can observe social distancing and where, you know, if and when they catch something, they can be taken care of rapidly without having to queue outside the hospital or to receive a respirator in the corridor of a hospital, which, you know, is some of what, you know, we've seen when the world was overwhelmed by this. So if countries prepare themselves in order to avoid being overwhelmed, the only way forward is to resume normal economic activity while taking advantage of technology.
Yeah, thank you so much. We cannot agree with you more, Dr. Eid. And yes, the industry is ready. On I mean, on UFI side, we have launched with our partners a framework for reopening exhibitions and a guidance book for reopening exhibitions. All we need is a green light from the governments, and this framework has been very well received by local authorities. Our next question is an interesting one from Mr. Mahmoud. You're with us. Please, can you unmute and ask your question?
Thank you, Mr. Haddad. Dr. Florence, hi from Istanbul. As you know, in recent periods in Saudi Arabia, there are some social changes, like they're giving additional rights to women, and also they're easing the travels, like more easy visa policies. In fact, I would like to ask in 2 points. What's your opinion? As far as I know, in the last like 30, 40 years in the Gulf area, the hub has been changed from Kuwait to Bahrain, and recently UAE is the hub for the business and several other things. These new changes in Saudi shall make a change in the this, Gulf region in terms of economy and other points to Saudi, one. The second, especially in terms of events industry, conferences and exhibitions, now again Dubai and UAE is Emirates the main place. Shall this change in the near and or the medium future the hub to Saudi Arabia? Thank you.
My pleasure. It's always lovely to speak with someone from Istanbul. I should tell you, sir, that I've never been invited to a conference in Istanbul that I've declined, because I love Istanbul so much. But I'm not the only one. The whole world loves Istanbul. It's such a unique city.
Thank you very much.
Your question is extremely important. It's true that the locus of economic activity over the past 40 years in the GCC has shifted from one city to another, and that the most recent imminent shift was going to be Saudi Arabia. In some ways, it's possible that the pandemic slows down the shift of the center of gravity for new activity, not traditional activity like oil and gas, but new activity like entertainment, tourism, conferencing, all of that, to Saudi Arabia. It's possible that the pandemic will slow this down, because if the price of oil remains low going into next year, the Saudi government, they've already said, are going to have to reprioritize their investments. And it's possible that some of these new sectors of entertainment, of tourism, of MICE-related activities could see a slowdown, while the old sectors continue quite aggressively, such as oil exports and gas exports, etc. So what this could mean is that this works in the favor of the UAE temporarily, because the big fear, obviously, was that if Saudi Arabia implemented everything it wanted to implement in its vision, the sheer size of Saudi Arabia was going to potentially suck some oxygen out of Dubai, and people were starting to feel that in the sense that Saudi Arabia was hiring a lot of talent that was living in Dubai, etc. It's possible that some of this will slow down now. However, my personal view is that there is no way back from the Vision 2030 in Saudi Arabia, and whether it proceeds at 100 miles an hour or 50 miles an hour, it will proceed. And even if it proceeds at 50 miles an hour, it will still take out some momentum from Dubai. However, the UAE is an economy that has been very clever at reinventing itself and at adapting to what goes on in the world. And Singapore, it has always been a model for Dubai. They've looked at Singapore, they've been inspired by it. And Singapore is an economy that has reinvented itself at least 4 times since it was created as the modern Singapore by Lee Kuan Yew. So I think Dubai will also rise to the challenge. I think the UAE will think hard about how to reinvent itself, how to adapt to the new environment. Yeah, so those would be my thoughts with respect to this particular question. I hope I've answered it, but if
thank you very much.
Yeah, thank you, Dr. Florence. Actually, time flew extremely quickly, but I want to compensate the 4 or 5 minutes delay in the beginning. So I have a quick question, and I appreciate if you can give us a very brief answer, if you can. So basically, we've seen stimulus packages around the world, which is something, positive at the outset, of course. But I mean, some reports talk about 6 trillion of stimulus packages around the world. What could be the impact of these, or the unseen impact? Could this result into a hyperinflation in the economy in the near or mid future? Or no, this will help the economy to recover faster without any risk of hyperinflation?
So the impact on Western economies is going to be different from the impact on regional economies. Now, in terms of the West, the central banks have been taking quite aggressive measures in order to prevent rapid inflation, because the West has lived with hyperinflation before and has suffered massively from it. The German hyperinflation experience it is argued by many historians, was part of the cause of World War II and the rise of Nazism. So the West doesn't like hyperinflation because it understands its impact. And central banking today is a much more fine-tuned tool and is able to counter the potential impacts of inflation. So I'm not sure I see hyperinflation yet. What we do see inflation on the horizon, that's for sure. We do see much larger fiscal deficits. We do see interest rates rising because the cost of money becomes more expensive in the future in the West. In the Middle East and North Africa, the situation is slightly different, in particular for the oil exporters like the GCC states, because those stimulus packages, they were large, that's for sure. But if you like, they weren't taken directly out of people's pockets. They were taken from government savings of sovereign wealth. And that is different. That is different in terms of eventually how it impacts people's pockets. At the same time, the central banks are taking the same sorts of measures that Western central banks are taking in order to moderate the impact of potential inflation and to protect the peg for the time being. So I wouldn't worry about inflation in the short to medium term in the Middle East and North Africa. I would worry more about it in the West, and I think the chance of hyperinflation in the West is probably low for the time being. Now, Now, if this crisis continues for another 2 years, there's another discussion we can have. We can do another webinar and I can give you my view then. But for the time being, that would be my view on the basis that this pandemic will moderate and stabilize over the next 2 quarters.
Okay, great. Good to hear this. We will launch our final polling question now, and then closing remarks from you, Dr. Florence, before we end the meeting. Can we launch? Okay. So the question is, what region will be the fastest in bouncing back from the pandemic economically? Is it Asia Pacific, Europe, North America, Africa, GCC? You spoke about the most adaptable market earlier. So let's see what our audience think. It's obvious that majority think that Asia Pacific will be fastest in bouncing back. We have seen, so yeah, with 63% saying Asia Pacific, we have seen cities and countries reopening businesses gradually. So what's your comment on this, especially that you also spoke and we are seeing a second wave in China? What's your view on this, but really very briefly, if you don't mind?
Very quickly, I agree entirely with our participants' view that Asia Pacific will bounce back more rapidly, and not least for cultural reasons. They accept to wear masks. They don't mind. They've been wearing them for a decade, and that helps a lot. I was on a train in France in early March from Avignon to France. I put on a mask. People thought I was crazy. And then the lockdowns happened only 10 days later. So I agree entirely that Asia Pacific will come back rapidly. I also agree with our participants' view that the GCC and Europe will come back more or less at the same pace. So the point here is that the GCC will not necessarily bounce back more rapidly than Europe. And that's saying a lot. That's saying a lot because Europe is very slow to bounce back. Where I don't agree at all is the point about North America. North America will bounce back more rapidly than Europe and more rapidly than the GCC, because the United States economy is a much more flexible economy than the European economy and than the GCC economies. So the North America bar will be a faster bounce back in my view, even though we're still in the midst of it now and it looks terrible, but it still will bounce back more rapidly because of how flexible that labor market is. And Africa, I mean, we have yet to see the extent of it in Africa. It's hard to say because Africa was hit more recently, and it's hard to say whether it will bounce back least rapidly or more rapidly than the GCC and Europe, for example, just because the impact might have been lower. We have yet to see. So those would be my thoughts, Naji. I hope it's helpful.
Yeah, of course, very helpful. Thank you so much, Dr. Florence. Such an interactive and interesting conversation we had with you today. I look forward for others in the future. Thank you to our audience who joined us today. And with this, we come to the end of our UFI Connect session. Please send your additional or unanswered questions and comments to media@ufi.org. We will send you a survey also. Please complete it and send it back, and post on social media after this session closes: Twitter, LinkedIn, Facebook, and UFI Connects with hashtag UFI Connects. I would like also to invite you all to attend our next UFI Connects that is happening tomorrow, 18 June, the 3 secrets to selling events now. And you can register at the website, the link you can see, ufi.org/UFI Connects. And we have another session that we would love to invite you. It's specific to Brazilian market. It is in Portuguese and it's taking place on the 23rd June 2020. Finally, I would like to send a big thank you to our diamond sponsors that you can see them here: TSAB, Qatar Tourism Authority, Shenzhen World, and Freeman. Until we meet again, please stay safe, stay positive, and we will meet again in person for sure. Thank you so much.
All the best. Thank you, Naji.